Welcome to BigONE Weekly News Update. I'm Sophia. Crypto markets pulled back last week as Bitcoin and major altcoins surrendered some recent gains. Bitcoin fell roughly 3% below $63,000. Ethereum declined 1.7% to under $1,880, and Solana dropped 2.3% below $75. Hype bucked the trend, rising about 6% to $57. Broader markets remained resilient. The S&P 500 and Nasdaq extended their winning streaks, while energy stocks gained more than 7%. European bond yields surged, with Germany's 30-year Bund reaching its highest level since 2011. Softer U.S. data also reduced expectations for a September rate hike. Bitcoin ETF demand loses momentum. Bitcoin ETF flows reversed sharply. After U.S. spot Bitcoin ETFs attracted about $853 million the previous week, they recorded roughly $330 million in weekly net outflows, including $57.6 million on Friday. Coinbase's weekly trading volume also fell about 33%. Investors appear to be waiting for the Federal Reserve's July meeting minutes and clearer signals on September rate expectations before committing fresh capital. BIP 110 fails to gain traction. Bitcoin's latest governance dispute ended without a meaningful chain split. BIP 110 received only 2.53% of miner support before its proposed activation and quickly fell behind the main chain. The proposal sought to restrict non-financial data such as ordinal inscriptions. While the fork failed, the debate renewed discussion over Bitcoin's governance model and the balance between network neutrality and developer influence. Tether reaches a transparency milestone. Tether completed its first comprehensive independent financial audit, with KPMG US issuing an unqualified opinion on its 2025 financial statements. Tether reported that reserves exceeded liabilities by $6.8 billion at year-end. The audit provides broader independent verification of its reserves and financial position than previous periodic attestations. Ethereum's staking debate intensifies. EIP 8363 proposes gradually reducing Ethereum validator rewards as the staking ratio rises, targeting zero net issuance once 50% of ETH is staked. Currently, about 41.9 million ETH, or 34.7% of supply, is staked at roughly 2.6% annual rewards. Supporters argue that lower issuance would improve supply management, while critics warn that lower yields could discourage solo validators and increase reliance on liquid staking providers. The debate also matters for DeFi and institutional strategies that use staking yield as a financial benchmark. Bitcoin's emerging yield ecosystem. Bitcoin's surrounding financial ecosystem is increasingly developing new ways to generate yield. These include SBTC, lending and liquidity strategies, WBTC money markets, derivatives, corporate preferred securities, and covered call ETFs. BlackRock's BITA ETF, for example, sells calls on roughly 1/4 to 1/3 of its BTC exposure to generate option premiums, though widespread covered call selling could suppress implied volatility. The key question is increasingly shifting from whether Bitcoin can generate yield to how much risk investors are willing to take to earn it. What to watch this week? Key catalysts include the Federal Reserve's July FOMC minutes, U.S. services PMI data, earnings from Alibaba and Walmart, and the upcoming ZRO token unlock. Conclusion: crypto markets are entering a more cautious phase as Bitcoin ETF demand weakens and investors await clearer macro signals. Meanwhile, developments in Bitcoin governance, stablecoin transparency, Ethereum's monetary policy, and Bitcoin-based yield products highlight the industry's continued evolution. With institutional demand temporarily subdued and several macro catalysts ahead, markets may remain range-bound in the near term, while these structural developments could have longer-term implications. Join BigONE today and take advantage of the growing cryptocurrency market.